Good morning, everyone. Welcome back to Morning Markets on Friday, the 7th of August. A couple of things that the team have been discussing this morning to share with you. First of which, just looking at equity market performance yesterday. If we looked at what we saw in UK and in Europe, we saw weaker equity markets. Euro Stoxx 50 down about 0.9%, FTSE 100 down about 1.3% on the day. Across to the US, we saw US markets initially open lower and then they did trade higher through the course of the day. One of the things that may have helped in that was just the US unemployment report, so initial weekly claimant count, where we did see a reduction in the number of weekly claimants falling to 1.19 million. That was 1.4 million last week, and if you remember, we discussed last week around the changes that we were seeing just in unemployment data as the ongoing impact of COVID-19 was being seen in a number of different states. So we had seen a slight uptick in that, so now we've seen a downward draft again in the weekly claimant count. And also, I think worth mentioning the continuing claims number, where we saw quite a material fall in that from some 17 million down to 16.1 million. So that indicates and potentially speaks to the fact that the US economy has continued to operate it and to continue to recover despite what's going on in the background around the various rising infection rates in a number of US states. I think in other markets yesterday, probably the main thing to focus upon was in currency markets. We saw sterling continuing to strengthen yesterday post the MPC report. We touched on that initially yesterday just on a first glance. I think looking at it and reflecting on it a little bit more, the tone is slightly more positive than the forecast that the MPC had set out in May. That has supported sterling. Also, I think the other aspect that's important from sterling's perspective is just what the bank said about negative interest rates. And whilst they provided an analysis and their evaluation of it, it does look as if they are pushing out the need to use negative interest rates in the UK, setting out the challenges that it would present, particularly for the commercial banking sector. And that is one of the main credit transmission mechanisms into the economy. So if that is impinged from a profitability perspective by negative rates, it may have knock-on implications for the provision of credit into the UK economy. So appearing to push negative rates out, and that was supportive for sterling moving higher yesterday. I think the other things that we touched on this morning were just looking at the US. Overnight we had President Trump come out and issue an executive order banning US corporates from dealing with TikTok, so ByteDance's subsidiary that's operating globally, and also with WeChat, which is Tencent's messaging platform. So US corporates have 45 days to comply with this. I suppose one thing there, that 45 days may give Microsoft the time that it's required to complete the transaction for TikTok's operations out with China. It also comes on the day that further orders were signed in place in the US, placing more onus on Chinese companies that are listed on US stock exchanges. So the ratcheting up of challenge between China and the US continues, something that we touch on in this week's podcast. So if you get a chance, please do have a listen to that, and we go into a little bit more detail about some of the challenges that is being faced here and why potentially now is the time that these things are coming to the fore. Interestingly, we can get US politicians to kind of agree on some of those factors and move those forward. What's not moved forward at this point in time is the unemployment, the support packages, the fiscal support packages that are required by the economy at this point in time that did expire at the end of July. So those discussions remain ongoing. Looking at some of the reports this morning, does look as if they're as far apart as ever between the Republicans and the Democrats in moving that forward. So we do need to see movement on that, and I think that's an important thing for market participants and also for the economy to see in coming days. Finally, just today, we have seen Chinese export data this morning, which is much stronger than people have expected, coming in at some 7% growth year on year. and that compares to, I think, 0.5, 0.6% growth year on year in the previous month. So ongoing recovery, particularly there evident in the international side of the economy, and potentially that indicates the recovery that's ongoing internationally as economies have reopened as well. Please look out for, as I mentioned, the podcast that comes, and also our weekly letter which will come out later on this afternoon. Many thanks. Bye.